Welcome to Second Take, the show that focuses on the issues behind the news. Trade and Industry Minister Dr. Rob Davies launched the latest Industrial Policy Action Plan, or Ipap 2013-14, this week, in which mineral beneficiation has been earmarked as a key future reindustrialisation thrust for South Africa. Creamer Media's Terence Creamer joins me to discuss what the document contains. Welcome, Terence. Now, firstly, what is the Ipap and how does it fit in with government's other state plans, such as the National Development Plan and the New Growth Path?
Yes, I think there is a lot of confusion about what Ipap is, but it is an action plan, as it says in its title, and it's really informed by those two other documents. The New Growth Path is the main document that informs the Ipap, because it's been around longer than the National Development Plan, which was endorsed last year. And really, the New Growth Path and the National Development Plan provide this vision for the reindustrialization of South Africa as part of a plan to increase the amount of employment, which is our chronic Achilles heel, the fact that we have such high unemployment rate, and to raise the sort of wealth levels in the country, and to really do it through a series of interventions into the economy through, for instance, the big infrastructure, the development push that we've got. Things like greater attention being paid to regional integration, and obviously, the social issues around getting our education system working again. And then within this, the Industrial Policy Action Plan is the tool that the Department of Trade and Industry, and to a certain extent as well the Economic Development Department, but it cuts across a range of departments, uses on a yearly basis to set action plans for the year, and that they're going to implement to try and help the thrust towards reindustrialization of the South African economy. We've had an industrial economy that's really shrunk over the last few decades, and we're still in this phase where every quarter and every month we look at industrial and manufacturing production, and every month we get disappointed, despite having this plan, that we really aren't getting our productive sectors being mostly mining, agriculture and agro-processing, and then of course manufacturing. We're really not seeing the impact that we want, and that's quite evident in the current account, that the balance of payments and the current account in South Africa has got to a point where our trade imbalance is quite stark now, and we are importing far more than we are exporting. And also, if you look at the mix of those exports, you'll find that when we, especially to our BRIC counterparts, but not only to those, we're really quite primary product heavy. So the value-added products that go out of South Africa into other markets in the rest of the world, they really aren't as high as we would like them to be. And by contrast, we have a situation where we're importing a lot of value-added products. So we're exporting low or unbeneficiated primary exports, and importing the nice cars and all the things that we use in our homes. And there's an attempt through this plan to try and change that mix, mostly through putting a focus and a spotlight on the productive sector, saying we've got to really get these working again, and then as a consequence hopefully starting to change our export mix, and also into a growing region, being Africa, as being a key target market, as well as these BRICS economies, because the traditional market for our manufactured goods, being Europe mostly and America, are struggling.
This year's version, which is the fifth one of the Ipap, has a strong focus on mineral beneficiation. What does the document tell us about this?
Yes, the document covers a broad range of issues, from biofuels and strategies there, through to aquaculture, and through to getting our farming going and getting our manufacturing going again. But a key future thrust, I think, and this is important in this document that's been mentioned many times, is around mineral beneficiation. Now, everyone's getting tired of us talking about mineral beneficiation and nothing happening. But basically, I think that we're in a phase now where there's a lot more serious attention being given to how can we use our policy, our legislation, as well as our regulations to actually stimulate a change in the way so we don't just mine and export raw product, but we start adding value to that product. And at the moment, the Department of Mineral Resources is looking at the MPRDA, the Mineral and Petroleum Resource Development Act, and looking at a whole lot of amendments to that. Now, a key thrust of that is trying to improve the efficiency of that, administration of that, and that's important because we haven't really seen our mining industry grow along with the rest of the world as the rest of the world expanded their mining output to meet the demands, particularly of these BRICS countries. We actually saw our mining industry sort of stagnate during that period. So it's sort of about getting efficiencies into the system. But there is an element within the MPRDA amendments where they're looking at the mining value chains and looking at trying to use the industrial minerals platform that we have, because we have this treasure trove of, some estimate, $2.5 trillion sitting in our ground still, and looking at trying to find mechanisms, regulatory mechanisms that I suppose the word is quite hard, but to force miners or to force a partnership or linkages between miners and downstream beneficiation. Now that's tricky in a context where you don't have electricity, and we have got serious supply side shortfalls. But that, I suppose, people are saying or hoping is going to be a transient phase where eventually, when you have the Madupis and the Kusides coming on stream and the integrated resource plan for electricity starts delivering in all its elements, hopefully that shortfall is not going to be a chronic situation, but one that will be overcome over the coming decades. So really looking beyond that and saying, what can we do to try and facilitate that? And the Ipap this year looks at something called a mineral values chain strategy. And what they really initiated is a research into this mineral value chains. They're looking at 4 minerals. So ferrous, so that would be iron ore, manganese, those sort of areas. Then they're looking at platinum group metals, where we are dominant supplier in the world. They're looking at titanium minerals and polymers. And then there's a 5th element which really looks at the mining inputs, so the capital goods and other things that go into mining and exploration, development, and trying to look at those value chains. And part of that element will be try to integrate that through regulatory mechanisms into the MPRDA amendments, so that when people get their licenses, or even, and that's what's not clear, whether it's going to be a license condition or whether it's going to be some other form of designation, that some of those products will only be able to get accessed if the product there's some value is added to that product locally in the domestic market. So the idea is to capture the jobs and the value that we're currently exporting. So someone else takes our iron ore and converts it into steel, as a sort of crude example, or takes our platinum and converts it into a jewelry, and looking at doing more of that value addition locally. So the study is underway. It's being coordinated at the Industrial Development Corporation. It's actually being led, it seems, by Dr. Paul Jordan, who was very instrumental and a co-author of the SIMS document, the famous document that the African National Congress adopted in December, which also paid attention to this issue. And it's really unclear what the regulatory mechanisms are going to be. There's a lot of talk about declaring strategic minerals, and that there will be certain constraints around the use of those strategic minerals. There's possible policies around right of first refusal. We see that there's a big change of attack in, say, for instance, the scrap metal industry, where scrap exporters are going to have to first go to the Department of Trade and Industry, one of its subsidiary divisions, to get a export permit before they can go about that. Part of the condition is that they first have to offer that scrap to domestic users at a preferential price. So it could be mechanisms like that. It's very unclear at this stage what the mechanisms can be. But I must also point out it's not confined to the MPRDA. There are other elements, for instance, looking at the capital goods that South Africa already produces around its mining sector, and seeing whether more of those can't be produced for use in the domestic environment, as well as in, say, the growing African market or in the rest of the world where the resources economies are booming. So putting a lot more emphasis on the manufacturing of inputs that could go into be exported as well as be used locally through, getting commitments from the mining companies to procure more domestic product. And there are other elements as well that are not just purely about downstream beneficiation, which is a difficult and tricky thing. And I think the Chamber of Mines has really indicated that there's a skills and capacity issue around actually do we have the capacity and skills to build these sort of facilities locally? Can we be competitive in these environments? So there are questions around this. So it's not so narrowly based as maybe is portrayed, that it's just about adding value to the iron ore that we mine before it leaves. It has other elements and legs to it, and that research will evolve over the coming months, and we should start in stages seeing, for instance, what our plans are for polymers, what our plans are for platinum group metals, what our plans are for ferrous metals, and I think quite excitingly for mining inputs, because I think there is already an established manufacturing industry around mining inputs, and I think if we can get a sort of commitment to more local procurement, so using our domestic market as a base, and then also looking at greater export flow, I think that could be exciting, especially as Africa continues to open up and grow.
Now, what has been the reaction of industry and investors to the approach taken in the Ipap?
Well, there's always people are always nervous about this sort of intervention into a sector. Mining is a very key flywheel of this economy. It creates a lot of jobs. It creates a lot of value in terms of foreign exchange earnings. So and we've had this period of very slow expansion. You know, we've had a phase where when everyone else was growing, I think our focus was really about moving the deck chairs around. So the ownership deck chairs was really the focus during the mineral boom. So we had the mining charter compliance and the black empowerment phase of our transformation of our mining sector, which kind of, I think, took our eye off the ball, off the market. That was market opportunity that was there. We're now in a different phase where the minerals boom period of high prices and sort of where there was no end in sight for higher and higher demand. We're not in that stage anymore. You can see it in the share prices. You can see it in the commodity prices. But on the whole, there's a feeling, you know, that you know, there's the new base has been set for minerals demand, and that will grow off that base quite steadily. So there's going to be demand for these minerals products, but we're not in the super cycle boom fantasy land anymore, and we have to you know, cut our cloth to suit that new environment. But I think there's a view that more can be extracted from these mineral resources that remain in the ground, that we mine, that we haven't done enough to get the full jobs and value benefits out of that sector. And we're going to look at ways to do that. I think that there would be no disagreement. It's really the devil will be in the details, you know. What sort of tax regime, what sort of limitations are there going to be on the export of certain minerals? What are the unintended consequences that could arise from that? There's a long way to go in this area, and I think a lot of debate, and I think it needs a lot of visibility, and I think we need to give it a lot of profile, and I think there should be a lot of voices before we start making interventions that could have dire consequences for an industry that is still a very, very, very central and very important job creator and wealth creator in this country.
Thank you very much. That's the show for today. Join us again next time for more news and insight into what's happening in the mining world.